Well. What a day to do the webinar. What a day. Is it spicy enough for you, ladies and gentlemen? It's a busy day out there. Now, I will say this. If you're a currency trader, your things are relatively calm. There's nice volatility across the board, right? You've got, dollar yen moving around. Things are looking okay. Euro dollar's flat. However, if you're a US equities trader or a indices trader, then things are a little bit different, or even a crypto trader. NASDAQ is absolutely batteroonied. We are down almost 4. We were down 4% a second ago. The limit on the futures, but the limit on the futures is 7%. Long way away from that yet, but it's worth being aware of. Okay, Dow, we've got down almost 800 points on the Dow futures. We've got crude down, Bitcoin out chief, the Bitcoin crew. DAX is unwinding. It's a risk-off day, and as Tesla is well and truly under the cosh. So what a day, an apt day to be talking about this, which is filtering out noise. We'll get started in a few moments with the topic of the day. Maybe something to say, actually. I'll let people join in, and I can see numbers creeping up as you guys have probably got one eye on the markets, one eye on this, and stuff is super volatile, right? And one thing I'll say is this is, listen, if this is too volatile for you, it's okay to sit out. There'll be ample opportunities. We are just at the beginning of the month. We're just getting started. You've got so much opportunity coming up. You don't have to get involved with this. If this is your edge, then great. You do it, you trade it, you put your foot on the throttle, fine. But if it's not, don't be afraid to go, you know what? This is just a little bit too spicy for me. I'm just going to stay out and live to fight another day, right? Or even trading another instrument that isn't as spicy. We're talking about the FX, some of the FX pairs. They're not as wild as the NASDAQ. I mean, the NASDAQ's moving around in sort of $20 movements at the moment. It is really at the cold face of the volatility. So if it's a bit too much, then trade something else, or just sit back and watch it and say, you know what, let the dust settle. At some point, some things will stall. We'll have a consolidation. We'll have a reversal. We'll have a capitulation. We'll have some kind of move. So you don't have to worry. You think this is just creating opportunity. It's a lot of opportunity and a lot of spice, but hey, okay, so let's get a few minutes, guys, and then we'll get started. As always, we are going to focus on the topic of the day, which is filtering out market noise and focusing on high probability setups. 2 minutes, we will get started. Let's have a little scroll through while we're waiting. Anything I've not looked at? Coinbase 15%, as you'd expect, down. MicroStrategy 18% down. As you might expect, the crypto stocks riot down 10%. Apple down 5%, Meta down 5%, Microsoft down 3.5%, Nvidia down 5%, Tesla down 13%, Google down 5%, Amazon 3%, Goldman 5 to 6%, JP Morgan down 5%. Been watching those banks actually. They sold off quite hard. Amazon only down 3%, so relative strength, just 3% down. We'll see how the dust settles with all this. We'll see how the dust settles. It'll be interesting to see where we close today, right? Peloton 8%. Gold just sitting there. Of course, gold's on its own little journey. Crude oil down 1.5%. Nikkei 2.5% down. DAX smasheroonied. Dow, of course, down. Nasdaq's getting obliterated the most here. Russell and S&P close second. And watching the Chinese stuff as well overnight, see what happens. See where it closes, see what happens overnight. No rush, so much opportunity, no rush. If you're not already positioned, then you can let this calm down, let this die out. Anyway, let's get started, guys. Let's get straight into the thick of it. We will run through this because this is an important topic, and it's one that, especially at the moment, right? Especially at the moment, it's something you can just get caught out on. We all get caught out on news. We all get caught on noise. Sorry. And really what I want to do today is just help you filter through the noise, get clarity, and just declutter loads of things in your trading. We'll talk about strategies. We'll talk about setups. We'll talk about charts. Talk about environment. lots of things to cover, but by the end of it, I really hope that you'll go away saying, okay, I can remove that from my trading, I can eliminate that, and I'm going to feel more comfortable and confident with the way I trade. So today, filtering out market noise and focusing on high probability setups. As Paul Tudor Jones said, in trading, it's not about how much information you have, but how you filter it. And this was coming from a guy who obviously started trading in the 80s, maybe even 70s, right? Very, very different environment. Now we are bombarded with information. We have information overload. So it's very, very apt now in the current conditions. By the way, if you want to ask me a question, feel free. There's a Q&A section, there's a chat section. I recognize you've probably got one eye on the market, but hey, this will hopefully give you something that's going to give you some value for as long as you continue to trade. Let me just remind you guys before we continue the trading, especially if you're trading with leverage, CFDs, spread bets, of course, they're risky. It works very, very well. Example now, if you're leveraged up on the short side at the opening print, you're doing very, very well. If you were leveraged up on the long side at the opening print, you're not doing so well. So it's a double-edged sword. Please understand the risks involved when you're trading via a spread bet or a CFD or any instrument really that's got leverage. Things can turn nasty very quickly. Exhibit A, NASDAQ today. Okay, so yeah, please understand that. Understand the risks. We try to manage as much as possible. We try to use things like stop losses, position size, small position size, all that type of stuff, but you can never eliminate it. But that's why you're in here, right? You recognize it's high risk, but it's potential for high reward, and it's understanding the relationship and payoff between the two. Okay, let's get rolling. So last time, this is a webinar series. If you're new here, welcome. I'll introduce myself in a moment, but I remind you, this is a multi-part series for March. We had a different topic in February, and we'll have another topic in April. But at the moment, we're kind of really focusing on your playbook, right? The Traders Playbook, mastering your edge. And last week, we talked about finding your trading method and how to identify what works for you. So strategy success was about the fit for you, or potential strategy success, how it fits for you as a person, how you execute it, refine it. We talked about a process of how you go through in a quiz questionnaire we kind of covered as to how to find the strategy that's more effective for you, and avoiding the strategy hopping, sticking with the strategy, all that type of stuff, and of course tracking, testing, etc. So just a reminder, introduce myself, ladies and gentlemen, traders. My name is Mark Holstead. I have been trading for a couple of decades. 2001 I started, which was very much like this. And I'm pointing to my other screen here. It's very red when I started. I missed that bull run by a few years, as you traded in the bull run over the 90s, 99. I missed all that, but I was involved. And so this is kind of my stomping ground, and my proving ground, if you like, was bear markets. So I like this kind of stuff. But hey, I don't pretend to have all the answers or pretend to know it all. Absolutely not. But I come from a perspective of, okay, I want to share insights and ideas that I think will help you from my own experience, but also from running Traders Mastermind, which is a community of traders. And there are people there who have done very, very well over the years we've been around, and people who have done not so well. And so I try to look at all this objectively, the different characters we've got in there, different personality styles, what they trade, and pick the stuff that I see is effective, and I distill that down and share that with you. So I'm kind of in a bit of a unique position here, where I can share with you my own experience from my perspective, and also my observation of others who may be a little bit more ahead of you in terms of experience, etc. And also from people who I just see getting it wrong, and I just see it time and time again and say, okay, I see that. If I can share that with you, maybe you can avoid that mistake. So that's how I kind of come with things. I don't claim to have all the answers, because I absolutely don't, but I will help you as much as I possibly can. If you want to ask me a question at the end of the day, the end of the webinar, it's been a long day already, right? At the end of the webinar, I'll be happy to help you. If I can, if I can't, I will direct you to someone who can, or a source that can. Always do your own research, analysis, homework. If you like something from this webinar, if something sparks your interest, go and dig into it yourself. Do your own research, because not only should you do that, you shouldn't take anything on face value. You should always go and do your own digging when it comes to your capital. It's your risk money. It's your choice. But also from perspective, it gives you confidence to try out something, gives you confidence. When you've done the research, you've had a seed of an idea, and you've pushed it forward yourself, you feel more confident and comfortable to stick with it when maybe things aren't going as well as they should do. Things take time. Implement a change and stick to it. And please observe the results and then make course corrections. So run with it for a bit and make some course corrections. All become clear in a moment. And yes, I've got this raggedy old plaster on my finger because I managed to slice it open in some stupid digging around in a kitchen drawer where there's stuff in there that shouldn't have been. And went, So yes, if I'm there looking at a funny finger, I have got a funny finger. But I'm okay. Don't worry about it. I'm good. All right. So let's get straight into it, guys. 2 vehicles. Have you ever gone to buy a car? You know, Mark, where are you going with this, man? This is a trade-in webinar. I want to learn about trading. I want to learn about decision making. But let me ask you this, right? If you went to buy a car, you are looking at things that are important to you, right? It could be the price, could be the economy, could be the number of seats, the 0 to 60 time, the top speed, the manufacturer, the color, a specific feature. You know, and if you're a petrol head, you don't care about the MPG. You just care about the 0 to 60 time and the status. You know, boot capacity and safety features might be on your list, not on your list, but the exhaust, no, and alloys might, right? And that's what's important to you. So when you go in, you're looking at something that is fundamentally important for your decision. If you're price sensitive, you do a lot of miles, you want something that's relatively cheap. You want something that's relatively economical. You don't necessarily care too much about the brand. You want something that's reliable. Maybe you're not too bothered about the color. Maybe you're buying a used car. You're trying to get as much as you can for your money and you're trying to make it cheap. That's important to you versus someone who's going in spending a couple of 100,000 on the top of the range 911 and they're trying to say, hey, this is really important to me. And they're trying to make the decision based on, you know, what's important at the time. It's the same with trading, right? You know, if you went into making a decision of purchasing a car and you looked at every single thing that was important about the, or that was an option, if you like, or that was made a factor in the car, you would never make a decision. You're like looking at the turning circle, looking at the headlamp brightness, looking at the capacity of the washer fluid. Like these are all irrelevant things. You know, so when you're buying a car, you buy one, or it could be a house, could be anything in these decisions, right? You're buying it and you're looking at the things that are important to you. You're filtering out stuff that doesn't matter. You don't care about the boot capacity if you don't play golf and you're not going to use it to take family on holiday anywhere. You care about the 0 to 60 if you're buying because you want a sports car. You care about its off-road abilities if you're buying it to take it on a field because you've got a barn. You get the idea, right? And the same goes for trading. It's like too often we're looking at things that don't matter and we're worrying about them and thinking, hey, Dom, do you know what? I really like this Porsche 911. It's the perfect color. It's the turbo. It does all it. Just beautiful. But you know what? That screen wash bottle is just a little bit small, man. I might get caught in the motor. It's the most ridiculous thing ever, isn't it? But that's what we do with trading. We're there, we're watching stuff, and we're saying, well, maybe the price of oil is important. Maybe I should look at the Bollinger Band on this. We start adding things that make no difference to the outcome of the trade because that's not what we're focused on. Of course, if you are focused on that one thing, then you should look at it. But it's about decluttering and getting rid of things that don't make an impact on your trading decision, that helps you make a clear decision. So let's start off with this. Your environment, your screens, and your strategy have to be clear, have to be free of clutter. Otherwise, your mind is not. And imagine your mind like an ocean or a sea, right? If it's calm, you've got clear skies, it's easy to think, it's relaxing. But imagine if you're on a boat out in a choppy sea, it's very difficult to think of anything but survival. And that's the state we get ourselves in sometimes as traders, right? We have really choppy environment because we've got clutter in our environment. Our screens are full of stuff. We've got stuff everywhere. Our strategy is not very clear and it's very, very hard to make a decision. You're making it tough for yourself. So let's start off from the ground and let's work our way up. So the first things first, and we're going to get to juicy stuff. We're going to get to things that maybe you think are more important, but I wouldn't put anything in here if I didn't believe it was important. I promise you. I only put stuff in here that I think is valuable. And I'll be like, oh, whatever. But this is we're trying to build a place where you can act freely. You can make comfortable decisions. You can relax. You can look at NASDAQ down 800 and go, all right, I'm waiting for another day. I'm waiting for this. And you can be just calm about stuff. So declutter your trading space. And the reason you want to declutter it is for mental clarity. You and I both know, right? If you get in, go to a car analogy, if you get in your car and there's just crap everywhere, you don't like it. Okay, I know that's a personality thing for us to a certain extent, but generally studies have shown that a clear desk gives you peace, gives you clarity. If you've got stuff everywhere, you've got post-it notes here, you've got papers here, you've got sticky notes that, by the way, you just get changed by. And let's see if you've got sticky notes saying stick to your rules. It's pointless because you never see it after any point anyway. So get rid of everything, just any distractions. You just want a nice, clean desk with nothing on it. And it might be simple, but this is a good starting point, right? Keep a dedicated trading space. More on that in a moment. Don't sit there on the sofa with your laptop or in a noisy area in a cafe it just doesn't work. You've got to give trading the respect it deserves. And that means decluttering your actual workspace, the place you're operating from, so you can think clearly. So you're not looking at the charts and distracted by an old cup there, an old sandwich you had for lunch here, a bit of paper here showing this, a bit of this, bit of that. You just don't want that. You want absolute space to make it as good and as easy to make a clear decision as possible. And a good idea is at the end of the trading day, just clear workspace. So it's completely fresh, start the next morning, clear, don't have to worry about things like that. And by the way, she might be like, this is ridiculous, what's this all about? It doesn't make any sense. But I promise you, these things are free. They take nothing, 2 minutes, 5 minutes at most. And what about the ROI you might get if it allows you to think more clearly? Okay, so another thing, we're laying the foundations here before we get to more complex stuff. Reduce external noise and distraction. So get rid of any notifications. We talked about this before. Social media, bin it, alerts, anything that creates FOMO, get rid of it, ditch it. Personally, I put my phone on do not disturb mode and have a few select numbers that can break do not disturb mode, whatever phone you've got. I'm sure you can set this to, so that I'm not getting any notifications. I'm only getting emergency calls that come through from people or places that I will want to hear from, and they know that they're not going to call me unless they need to speak to me. And so that puts me in a comfortable position that I'm not going, oh, WhatsApp message or text message or this. I don't want that. And maybe you have that already, which is great. But for trading perspective, it's so important that you're not getting your focus ding, pulled away elsewhere. Noise cancelling headphones can be useful, or play some kind of lo-fi music in the background if needed. Right, here's an interesting one. If you trade from home, which many of you do, set clear boundaries. Now, I appreciate, and I understand that not everyone has, the facilities to go off and trade in a nice trading office and it's very, very quiet and all this. I understand. Everyone's trading with the resources they have. I get that. But, wherever you trade, set some clear boundaries. So if you have a spare room, then great. You have the spare room, it's a trading room, maybe use it for other stuff as well, fine. But set boundaries and say, hey, if you've got family around, say, hey, listen, dad's husband's, he's working here. When the door's shut, or I've got my noise cancelling headphones on if you have to trade in a shared place, don't disturb me. I will be done at this time for a break. We can play, we can have some food together, whatever it might be, if you've got kids. But while I'm here and I'm focused, I can't be distracted. And if everyone's on board with that, it works. And it's something that I think works well is if you do have children, you are trying to do it and you feel guilty about it, say, listen, if the door's shut, dad's working, but he will be done at this time, and then we can do something. So unless it's an emergency, and just get used to it, right? They get used to it. And it might be tough at first, but it's worth it so that you don't, because how many times have you been ready for a trade, right? And all of a sudden you get distracted, and then you're kind of doing something, you're answering a question, doing this, and you come back and miss the trade. And it just creates frustration, it creates animosity to that person. It's no good. You've got to work, it's always say that, a trader's an entrepreneur, and it's working with the resources you've got. And if you've got an area that is maybe not the best, then you work with it and say, hey, when I've got my noise cancelling headphones on, please don't disturb me. Come out when I'm ready, or whatever it might be. Okay, that's by the by. Close any tabs that aren't essential. And you know what it's like. One click on one news site or social media, whatever your thing is, and you can be gone. You can lose half an hour. So just be disciplined with that and set a kind of a timer where you say there's no notifications before the market, so I can focus on the prep. Okay, so let's talk about screens quickly. Optimizing your screens and trading setup. More screens doesn't always mean better trading. I had a massive setup. I had 8 screens all rolling. I was like, oh, this is the. And actually now I've pared it right down. I feel so much more comfortable. Just a couple of screens. I've got everything I need on here. I can just flick back and forth between stuff. I don't need to have all that information. Maybe you do, and that's fine, but just understand that you are creating a distraction. If you need it to make a decision, I'm okay with that. If you're trying to monitor the correlation between asset classes and that's a proven effective strategy for you, then you go for it, right? But if you're there and you say, hey, I'm only putting stuff in here to fill screen real estate, I don't really need it, think about paring things down a bit. There's no harm. There's a guy what's the guy's name? Don Miller. He documented his trading journey. You can check him years ago. This was now. You think he's still got his blog up there, and he put up 2 million, I think it was, trading the S&P with a laptop, right? So you don't need massive amount of screens. So stop flipping between news, X, Twitter, whatever you want to call it now, charts. You end up just reacting to stuff. So a good idea is have one for your execution, one for your charts. So you have your chart up, and then you go, right, am I going to execute from there? And different, trading view, you can have different tabs as well. But listen, these are all ideas. The idea is just to declutter stuff, guys. Just declutter things. Just try to be smart about how you're allocating all of your resources. I know it's tempting. I could get it, right? I understand there's information, then you want it. You feel like you want it. We'll get to this point in a moment. You feel like the more information I've got, the better. I need to be informed. I need to be able to see this. I need to be able to see that. But very often you don't. You don't need that daily chart there all the time. If you're day trading that Dow, if you're day trading NASDAQ, good luck today. But if you're on the long side, fine if you're short. But if you're day trading, let's say NASDAQ, or day trading gold, do you need the monthly chart up all the time? You probably don't, right? So it's just focusing and narrowing that, focus laser onto what is making the impact now. Just like we went back to that decision-making process, you're buying that car. Do you really care about the color of it if you're optimizing for miles per gallon and you're trying to buy a daily driver and you're very, very price sensitive? No, you're not. As long as it's not garish, I don't care if it's black, silver, red, whatever, versus someone who's buying it because he wants to be seen, he likes a quick car, and it's very important to him. You get the idea. Okay. Simplify your charts. Don't clutter stuff up. You know this already. Try and keep the background neutral, right? Darks, light theme. I've seen people with these garish kind of things and think, oh, well, I've got all these unlimited customizations. I'll do that. There's just no point. Just giving yourself distractions, and the subconscious kind of strains at this thing, flicking around between different types of charts, candles and bars. Just stick with one. And also, here's a great idea. This works so well. I know that sometimes indicators can creep on your chart, different strategies, different things, this, that, and the other. Just once a week, have it in your plan. You go, hey, I'm just going to audit and make sure I just clear off any of the drawings, any of the levels, any of the nonsense I just don't need anymore. Because all it does is create extra distraction and clutter. You've got these levels here. You've maybe had a moving average up because you were looking at something. Maybe you stuck up a Keltner. Maybe you stuck up a Bollinger Band. It's like, hey, just get rid of that. You just don't need it. Go back so you don't get that kind of creep over time. Okay, so the problem we have, too much noise, not enough clarity. And this is so important. And I know this is kind of not a sexy topic. And if you're here listening to this or you're watching the recording, kudos to you, because it's not something that's like the latest strategy or 2 hacks to kind of improve it. It's like, no. But it's something that if you're here, it makes sense. That actually, if I can just reduce the noise and I can clear through the fog, I can probably make some pretty decent decisions. I'm just overthinking stuff. I'm just hesitating. I'm missing opportunities just because the noise isn't helping me, isn't serving me. And that could be noise from external things like we talked about before. It could be noise from price. It could be noise from your charts. It comes from everywhere. And we want to just drill through that and give yourself space to operate. Just give your brain a chance to operate clearly without having the distractions. The human brain is a powerful thing if you can just focus it in one area. Like, hey, I'm trying to buy this level. I want to see how price reacts to this level. Okay, I don't want to be distracted by anything but this. I want to make the best possible decision I can. I'm risking capital. It's important to me this. I want to get this right. I don't know if the trade's going to work or not. Go through all that in your mind. But the last thing I want to do is to be distracted at the last minute, the final hurdle. I want to get the best possible shot. And so this is a really easy way, not easy because there's stuff we'll come to in a moment from a mindset perspective, but just decluttering things. So get rid of the news, opinions, indicators, all that type of stuff. And the best traders just filter out distractions. Like you look at the very best traders, they're only looking at 1 or 2 things and then they're making their decision. So more information doesn't equal better trades. Okay, I say this and I kind of smile when I say this because, we've all fallen into this trap, myself included. If I think back to the early 2000s, The more information, the better. Well, I'm going to trade the FTSE. I want to watch the DAX. I also want to watch the NASDAQ. I also want to watch some of the, the high-weighted UK stocks. I also want to watch the news. I also want to watch. And you think that if the more ducks you get in a row, the more accuracy your trade is going to be. And that comes from this fallacy of the more information I have, the more likely the trade is to work. And as soon as you can get rid of that, as soon as you can just dissolve that away from your brain, life becomes easier, man. I'm telling you, as soon as you can say, you know what, it's completely opposite. It's not more information. It's what I do with the information, the important information. And the sooner that becomes, you believe that in your mind. It's already all saying it, but as soon as you believe it, the easier it is to discard stuff and say, I don't need that. I don't need this, and this. Okay, this is what I'm focused on. I'm not going to be swayed. I'm not going to be seduced by something else. I am focused on the job in hand. And the thing is, it's detrimental, because what happens is you're looking at price, you say, I think there's a great long here, it's setting up at my level, I've got a level that I drew in pre-market, it's wicked through it, it's bounced back up, it's now holding, I can structure a nice long here with the stop below the low for a move back to VWAP, for example. Let me just check this, let me just check that. And then you start to second guess yourself, you hesitate, you start to overthink, before you know it, the trade's gone. You've missed the trade. Or that's the common thing, or the trade doesn't work and you reinforce, I'm so glad I checked the news then, because I would have taken that trade if I'd just done it based on the trigger. And that's the worst thing that can happen, because it reinforces the behavior of, I need more data to support this trade. You don't need more data to support this trade. This is a business of risk. This is a business of uncertainty. We do not know the outcome. We will never know the outcome of a trade, and we have to be at peace with that. More information does not give us more accuracy. It hinders the decision-making process. Just like back to the beginning, when we talk about choosing the car, if you've got all this information, you're like, I don't know what's good and what's bad, right? You go, I know what's important to me. It's got to be quick. It's got to look good. Right, that's it. That's all I care about. Or it's got to be efficient. It's got to be cheap. That's your North Star. Everything else becomes redundant. So you can make these decisions. And it's all about being sharp and smart. Same if you're buying a house, right? I could use the same analogy and go down that. What's important to you? It's got to be location here. I've got to have this decent size garden, whatever it is. Yeah, but it's got, this room's a little bit smaller. That doesn't matter to me because I'm not interested. You get the point. And the same should be with trading. And the key is not to look at everything, but to really be disciplined about focusing on the right things that matter. So think about what's important to you. Okay, example, high probability signals could be price action, the structure of the market regime, volume, key levels, all good stuff. Obviously, I think news is a distraction for most people, unless you're using it as part of your trading process and trading plan. Fine if you are. I'm not telling you how to trade at all. I'd never tell you how to trade, but just be sure that it is actually a serious consideration, is why I paused there, because many people look at news and go, it helps me, but does it really? Does it really? Opinions, again, someone argue, and there's always someone who pushes back, and that's why I kind of have this caveat. So as a result, I like to look at sentiment, and I'm thinking actually, Jason Shapiro here, great trader. He's on YouTube. He's got a YouTube channel. He's been on loads of interviews and stuff. He does look at opinion, i.e. sentiment, and he looks at news, right? Oh, my little thumbs up, great. So it's important to him. But for you, maybe it's not. Right? Maybe that's just going to create distraction. Too many indicators. So what's yours? What's your low value distraction? And think about it now, because there's always something you go, do I need it? In fact, even me now, right? I'm looking at my other screen here. I'm going, do I really need Nikkei on during the trading day? I don't. I can get rid of that. And I'm like, what else? What else have I got here? And to be fair, I've not got that many distractions, but that's crept on. I've been looking at that because, is that going to affect how I trade today? Absolutely not. I couldn't care less. I'm interested in it, and it should play a part in my pre-market prep and my post-market review. And I want to look in the morning and see how Japan, see how Asia's reacted, see how the futures are like. That plays part in my pre-market preparation, but I don't need it here now. And specifically with a day like this, when we've got a lot of information coming at us, I should probably get rid of it. So it's never perfect. No one's ever perfect at it, but just think about it. That may be not so detrimental, but maybe you've got a news feed going. Maybe you got this, maybe you got that, we got that tab open. Just be smart about stuff. This is a really efficient way of getting a decent ROI from what you're doing. So thinking about, noise really leads to overtrading and poor decision making. And It may be that your discipline challenges can be solved with this. And the reason I say it cautiously is because, yes, I know some people overtrade and they've got problems with trading on tilt. And then these are issues that we've dealt with and we'll continue to look at and try and solve with you. But actually, you might find that making the decision much more simplistic reduces the FOMO, because what you want to do is get yourself into a position, right, where your shoulders are down, you're relaxed, you're not tense, you're not anxious, you're not scanning like an animal that's been hunted. You're relaxed, you're cool, you're calm, you're looking at the things that are important to you. And you're saying, yeah, right, this market's selling off, but I need to see this. I need to see a push above the VWAP and hold, for example. Not a play idea here, but then you what are you doing? Just sitting observing, right, or whatever it is to you. But the thing is, if everything's looking and you get anxious, and what happens is you build the anxiety. You go, oh, maybe I should be looking at oil. Maybe I should be looking at Russell. Yeah, but Trump said this, and you go, okay, well, oh, geez, I'm going to miss something here. I need to trade, and you trade, and it's not repeatable. It's just a FOMO trade. Maybe it's based on revenge because you took a paper cut early in the morning. And the noise is what is actually adding fuel to the fire and causing the anxiety and the frustration to build, because you see all the other stuff going on. You're like a deer in the headlights, and the impulse of a deer in headlights is to freeze, but for you it's to click the button and get long or get short, right? And it's that, and sometimes, so why I pause then is to say, listen, this is a very simple way to start. If you're struggling with discipline, you're struggling with sticking to rules, sticking to the plan and stuff, think about decluttering it. Now, you'd never have to stay. Traders always say to me, but Mark, if I do this, it's not what a trader I want to be. I feel like this is valuable to me. You don't have to stay here forever. Just prune back some of the things you use to make a decision and see how you get on. You can always layer them back in. Trading is always a process of evolution, right? It's taking a few steps back, 3 steps forward, hopefully 2 back, 4 forward, 1 back, 2 forward. It's that game. And sometimes you've got to step back, declutter the whole process and flow chart of how you make the decision, your filters, your triggers, so that you can then say, you know what, I need something else, or I don't need something else. And also, you always feel like you're missing something, and that's the trouble. So something to talk about from a chart perspective. And I know this is oversimplistic, but I have to say it because sometimes I gloss over stuff, and someone reminds me in the Q&A, and I go, you know what, I should have done that. So think about if it was up to me, right, I'd say to you, don't use any indicators for now. And I would say, if you are struggling and things aren't working as you'd like them to, try taking everything off your chart. Try reducing everything. One time frame, one market, price, and volume. That's it. And just start from there. Because what happens is you've built up over time these things you believe are effective for your decision making. Oh, I have stochastics for this. Oh, I have market profile on the side for this. Oh, yeah, but I like to see the 15-minute of this and this. And you start to reinforce the need for this. It's like a crutch. But actually, if it's not working for you, then the best way of moving forward is to just clear the decks, start from zero and go, right, I want a 5-minute chart of the market I trade. That is it. I'm allowed to draw 2 horizontal lines. That is it. And you build up from there, and you start to just get direction right. You start to just call out some trades, A to B plays, all this type of stuff. And so I say here, the 3 indicator max rule, as a very, very, as I think that should be the least, or the max, the very max. I think you should go back to none. But, I appreciate some people like to use indicators. I'm not here to vilify indicators at all, but I'm here to suggest you just try to make the decision as easy as possible. Either one time frame, one asset class. Am I going long? Am I going short? You take it, I didn't even include this, but perhaps I should. I'll talk about it. You take away stops. You use a very small position size, super wide stop. You take away adding. You take away scaling. Take away target. You just get direction right. You just start off by calling direction, and you use a very small size of the wide stop, and you say, I think this is going to bounce here. You go long, and you see if you're right. And you run that for a while, and you see how you can improve from there. And you see, well, actually, you know what? I probably do need VWAP. I probably do need this. I probably do need that. And you start to layer things back in. And if you're focusing on the key fundamentals of price action, supply, demand, imbalance, advertising of fresh price response to key levels, structure, volume, all this type of stuff, you'll find actually that it's much, much, honestly, so much easier to make a decision. You go, is price at a key level? No, and I don't care. Has price done this? No, then I don't care. Rather than say, well, I should be doing something right now. It's moving. I mean, God, I'm a trader, right? I should be getting stuck into it. So clean off your charts, improves. I shouldn't have said execution speed there. I meant from a perspective of, well, maybe I didn't mean it. I meant it from a perspective of eliminating hesitation. So it's like I see the trade, see the trigger. Yes, binary decision. I'm in the trade, as opposed to double second guessing, should I say, hesitation, all that type of stuff. Okay, one thing is that many people try to watch too many markets, I believe. Again, and I know everyone's like pushing back on me, and that's going to hear you mentally. I can hear you mentally going, Mark, friction of it. I can feel it, right? But if you just humor me, and again, you make your own decisions, right? I'm not here to tell another man how to trade, a woman how to trade. It's absolutely your decision. But I will say this is how you go back to basics and go back to the fundamentals and say, hey, I don't need all the stuff on my watch list. Let me just prune it down. I'm getting distracted by the price of oil when I don't even trade crude oil. I'm watching gold when I don't care about gold. I'm not even allowed to trade crypto, for example. If you're a retail trader, you're accessing via spread-bet CFD, you can't trade crypto. So why are you watching it? Why are you watching some of the stocks you don't want to get access? This is the point. It's like just declutter things. Sometimes I go through phases where I go, I'm scanning for these couple of stocks. These stocks are really in my radar now, and I'm going to not even look at the broader market. I'm going to glance at it at the end of the day and see if we're, not doing anything stupid, but I'm focused on these because I really want to nail the entry on these. And it feels a little bit uncomfortable. You feel like you're blind, right? Oh, I can't see the NASDAQ. I need the NASDAQ. Yeah, maybe you don't because you're so focused on this. If you're trying to trade Euro USD, you're trying to find a great entry for that. Maybe you need to eliminate absolutely everything except Euro USD. Or maybe you say, you know what, I probably need USD yen in there, probably need cable in there. Maybe you make a few, just have a few pairs in there. So smaller, focused watch list. And listen, I get it. I get watch list creep as well. Stuff comes on. I'm like, why the hell have I got that on there? I put it on there from a while ago and it happens to still be there. It's just creating noise. You might not realize it, but it's subconscious. So declutter everything. Charts, watch list, area, all the stuff we talked about. It's such a superpower's a bit excessive, Mark, but it can help you develop, much more structured trading and track your plays setting up without getting sucked into something else. Okay, so defining rules clearly. This is important. So we've decluttered our environment, hopefully. We've decluttered our charts. We've gone back to basics, as uncomfortable as it is. And I get it. It's uncomfortable. You've been using that stuff for ages. But as I say, if things are working for you, don't do any of this. You carry on doing what you're doing. Yeah, I'm never here to say if it's working for you, you should change. You keep doing what you're doing. That's good. Just do more of what's working. But if it's not, and you've tried other stuff, then maybe consider it. Going back to basics. Watch list, very, very minimal. Chart, very, very minimal. One chart, no distractions, just your chart you're looking at to make your execution decisions on. So an idea here of a kind of a workflow, if you like. So defining your rules, and I like to think of a filter and a trigger, and I've talked about this a few times. And again, I'm not here to tell you how to trade or to push a specific method down your throat, because I recognize that people trade different time frames, different markets, and hopefully stuff I share is valid whether you're a hyper scalper or whether you're a swing trader. It's a mindset, it's a structure, it's stuff. And I think that adds more value than saying, well, do this, this, and this. But I do follow a filter and trigger process, and I see other traders doing similar. Maybe they call it something different, but it's to first, maybe you identify the market regime, right? Are we trending? Are we ranging? Are we choppy? We were sitting in an uptrend not long ago. Now we're in a brutal downtrend. Maybe you use the strength of the trend. Maybe you use ADR, something that is helping you to judge the market regime we're in now, because that's so important. However you do it. And again, I say I'm not here to tell you do this, this, and this to get that. That's not that. I don't feel that's my job. My job is to help guide you, hopefully, and you make your own decisions. But I suggest that actually it's better to get an overview of what the market's doing, because if you're trying to fit, what is it? I always remember which way it is: square peg, round hole, round peg, square hole, a hole that's not supposed to have that peg in, right? then it's never going to work. If you're constantly buying dips in this market, you'd have been slaughtered for the last 10 days, right? And it's understanding that it's not an easy way to do it. And next week, I'll talk about next week in a moment. We'll talk about, how to be disciplined and how not to get stuck in stuff. And the week after that, we'll talk about regime shifts. But the point is your process. You say, right, I've got the higher time frame regime we're in. Rising tide lifts all ships, falling tide sinks all ships. Are we ranging? Are we choppy? Mean reversion? What am I deploying here? And then the core signals that help you get into the trade, like, hey, I want a strong trend. I want to see high volume. I want to see contracted volume or contracted volatility. And then comes your triggers, so your trade criteria. So I want to see a flag, a pullback, a wick, and then I'm going to get long with a stop below the low. I want to see momentum breakout above the high. You get the idea. I don't just go through stuff. But it's that filter trigger process. The clearer you can get with this, the easier it is. And not getting distracted with reams of rules. I see new traders coming in with kind of printed sheets out. If this is this, then that, then this, then check this, then do that, then that, the other, and don't do this, then do that, and make sure you do this. And there's absolutely zero chance you're going to stick to it. Zero. You're never going to do it. You have to be very, very clean and clear. I just want to make sure I'm in a trending environment. I want to make sure I've got a strong trend on the daily. I want to buy a pullback to a moving average. I want to set a stop below there. You get the idea, right? It's as simplistic as that. You can add complexity later if you need it, and rules to filter out edge cases or bring in specific edge cases into your trading. That's fine. But I think the complexity of rules, again, we're on the topic of noise, just adds that noise of like, oh my God, there's so many rules to think of. I can't risk this. I can't do that. And before you know it, your mind just goes, oh, click, I'll just get into the trade anyway. And it's just not repeatable. So pre-market prep, super important. As many decisions as you can should be made before the market opens. And I know some people say to me, Mark, how do I know what to do? And you don't, right? No one knows how the market's going to play out. No one knows how things are going to evolve. If you'd have known today we're going to be heavy down on the day, you would have gone short the open with all your buying power and walked off and gone down the pub, right? And nobody knows, okay? But the point is that a lot of the decisions you make should be taken off your shoulders, so you relieve the decision-making burden, should I say, as much as possible. So in the heat of the moment, you aren't second-guessing, you aren't hesitating. All the heavy lifting's been done. All you've got to do now is do the last bit. So you might say, hey, do you know what? If this level gets touched, I kind of want to see a wick on the 5 minute that holds, and I'll buy that. And so if that level doesn't get touched, you're not involved. If a level gets touched, now you're looking for a wick. You see the wick. The decision you've got to make is to buy it, where to put the stop, and how big the wick is. There's some decision making to be made in the heat of the moment, but most of the burden has been removed from you. And this is hard. I know this is hard. It's not easy, but it's something that's worth focusing on. Because the more you can de-stress yourself and reduce anxiety and pressure to perform and to make all these perfect decisions intraday, the easier life is going to be. And just setting up that plan to reduce those on-the-fly decisions. So think about having a distraction filter rule. If it's not actionable, don't engage. If it doesn't make a difference, in other words, if it doesn't make a difference to the outcome of the trade and the reason you take the trade, don't even let it come in. Right? Be protective of your environment and your process. Like, this is my environment. This is my little business here. This is my process. Nothing can come into that unless I've thought about it. I've planned it. I've decided, yes, do you know what? That is having an impact on the markets. I'm going to have to look at that. And I'm going to do this, this, and this. I'm going to make sure I've got this, this, and this. Right? When you let those extra variables creep in, you end up saying, why am I even doing this? It's like if you're doing a pre-market prep, right? Many people have a pre-market prep list and they're looking at all this stuff and they say, well, why are you looking at that? Why do you care what Nikkei did? Why do you care what? Oh, well, you don't. It probably doesn't matter. It plays such a minimal impact in your decision-making. You're probably adding too much noise. What if it has suddenly ripped up? What are you going to do? If Hang Seng is suddenly up 3%, does that affect how you trade the Dow? Does that affect how you trade the NASDAQ? No, the opening print relative to the prior days are what matters, and that's going to perhaps be impacted by what Asia did overnight. But what Asia did doesn't impact how you trade it. And I'm using this as an example. Maybe it does for you, but you get the idea. The open relative to the prior close is probably the most important thing for you if you're trading the opening print, as it is to what happened in the overnight session in Asia. So just remember that some of the extra variables that kind of can creep into the trading decision, and always flip on its head. Do what most people don't. Most traders add more stuff. Flip on its head and say, why is this here? Out. Why is this here? Out. I don't want to have this decision here. I want the clarity to be able to make a clear decision and allow my experience and my judgment to actually make a decision based on logic rather than emotion and anxiety of over bombarding with different variables. So, when you do that, you shift your confidence, right? You start to trade with more clarity, emotions start to, you're never going to become a robot. We're not here to become robots. You want to become a robot, go on an algo course and build algos and operate algos. But by the way, that won't fix it because you'll still be seeing the equity curve and you'll still have emotion, but that's by the by. But the point is that we just want to filter out noise to improve our execution, our confidence. We want to shift from reactive to proactive. We don't want to be diving into stuff. We want to be calm about the way we trade. And honestly, it's a much better way to live. If you're calm, you're observing, you're seeing how things are playing out. It's nice, right? It's nice. It's much better than being anxious. Oh, I missed that. Oh, it's doing this. It's doing that. It's such a calmer thing. And often we have in our traders mastermind calls or our members calls on a Thursday, traders come in and say, you know what, I've just slowed things down and I feel so much more relaxed about trading. I feel like this fits me better. I'm starting to kind of feel more comfortable with the way I trade. I don't have that anxiety. I don't feel like I'm missing out. And yeah, maybe you haven't got the results you want quite yet, but the point is that's the starting block. Just getting comfortable with the way you are, let your shoulders drop, not getting anxious, and reducing the amount of noise and things that you need to make a decision is absolutely the first port of call here. Trading less, of course, can improve results. And I dare say, actually, most of the time that does improve results. Not always. You can never guarantee anything in trading. So before we go to some Q&A, let's just run through some of these key takeaways and pause on these for a moment. If you want to put your questions in, guys, you absolutely can. Noise is the enemy of confident execution. We need to just be looking at a few variables before we make a decision. Remember, we're taking a lot of the decision-making burden off us. So we're saying, if this chart is doing this, then I'm interested. If price is doing this, then I'm interested. Then I'll make the decision whether to take the trade or not. I'm not constantly reviewing every minute of every day. Should I take it? Checking stuff. Because you'll combat it. So shouldn't overtrade. All of a sudden you'll see something like you'll trade. And you're fighting a losing battle. Whereas if you have very strict rules and you kind of use that criteria that kind of acts as a filter. No, the filter's not been met yet. No. Now we're in the zone where I can actually consider doing some business. I'm not in the trigger area yet. I've not actually activated the trigger, but I'm in the zone that I might consider the short or I might consider the long. And that might, by the way, that might develop intraday. I get that. Like maybe today you're like, okay, I'm not shorting the lows, but I'd like to see a pullback that kind of stalls out maybe in the last 15 minutes of the day. Okay, so your zone of interest comes there. There's your trigger, right? Your filter. Your filter is if price is in this zone, I'll look for a short. And the trigger then might be, hey, if we do a wick to the upside that fails, if we have a momentum candle to the downside. I'm just talking hypothetically here, but you get the idea. You're kind of, and then you're relaxed. You're like, I don't care where it goes. If the filter's met, then great. I'll look for my trigger. If my filter's not met, there's no problem at all. And you can improve the filters over time when the market's closed by writing down different filters and different ways of trading. What you're not doing is you're not adding loads and loads of stuff and making that decision very, very difficult for yourself. So focus on zero clutter, desks, spaces, distractions, clear signals. You just want your filter process. You don't want any kind of anything distracting you from what's going on. Structured charts, easy to read charts, watch list, watching fewer things. Again, it's about pruning, and having that good trade quality. So some things to think about here is protecting your process. Like life depends on it, right? No, nothing's coming into this. It's very, very simplistic, and if anything comes in, it's got to be damn sure it's going to move the needle in the right way. Otherwise, it's not coming in. No way I'm looking at this. There's no way I'm looking at that unless I know that that's going to help me. So think about what distracts you the most. It's worth thinking about, because if you can analyze, if you can pinpoint that, then you can take steps to remove it. It might not be easy. I live in the real world, guys. I know that some things aren't as easy as just get rid of that distraction, but you can start to understand what impacts that. If you can start to understand what impacts that, you can start to tune it to make better decisions and work for you, rather than constantly fighting it and battling it. I must stick to my rules. I must be disciplined. It's like, make life easy. Just try to relieve it, unwind it a little bit, detangle it, take some of those distractions away so it's free to operate. Think about a filter and trigger rule process. That's the way I like to do things, but think about your own. Clear up your environment. Go away, just clear up your environment. Sometimes I might put a fresh lick of paint around the place just to freshen things up and just change my desk around. I moved it recently. I've got my bookcase here. Just freshen things up a bit. Your environment matters so much. Who is it? The Japanese who's going for the feng shui stuff? I don't subscribe per se to that, but there might be something in that, right? And maybe you don't kind of have to face a certain direction. You don't want to do that. I get it. But clearing the clutter away, freshening up your walls, changing your direction you face, just refreshing things to make things easier, sometimes is important, right? Sometimes it's important. And what does it cost you? Hour of your day, 15 minutes of your day, nothing. And protect that decision-making process at all costs. Because if you allow stuff to creep in, you get decision creep, you get variable creep. Before you know it, you've got all this stuff, you don't know why you're doing it. And it's just adding noise, it's frustrating you, it's adding anxiety, and you just don't need it. You need to be that guy who goes into the car dealership and he's like, right, I want to buy the very best I can buy, and it's the quickest car I can buy. I don't care about anything else. It's a clear decision. The salesman says, sir, step this way. I've got just the vehicle for you. It's the quickest production car out there. It's £500,000, whatever the hell, it'll probably be 2 million, right? If it's going to be something spicy, but you get the point. I'm big enough ideas in my head, and it's a very simple decision to make. Have you got the money for it? Yes. And I know I'm being simplistic here, but it's an easier, freer decision. And it's the same with trading. It's like, does this match my filtering criteria? Yes, I'm going to pull the trigger on it. Okay, so this week, if your Q&A, guys, if you, what are you saying, guys? It's unauthorized Americanism, right? Traders, please, if you have a Q&A, you're very welcome to put it in here. I just remind you, we have the recordings which you can request from Pepperstone for Tuesday, which was finding your Tuesday 4th, sorry, which was finding your trading method, how to identify it works for you. That was a really good session. Enjoyed that one. Today, filtering out market noise, focusing on high probability setups. The recording will be in your inbox. If it isn't, you can request it. We'll send it to you, or Pepperstone will send it to you. And I can send it to you now. Actually, I've got access to the recording, or Armand will send it to you. If you reply to one of my daily emails, Armand will send you a copy of that if you haven't got it for whatever reason. Next week, we're back to the Tuesday cadence. So discipline dilemma, sticking to your plan without becoming too rigid, difficult. You don't want to be shackled by rules. You don't want to be a complete algo, a robot, but at the same time, you do want to have some kind of barriers. I'm going to talk about that because it was in time when, I dare say you have to be a little bit flexible, but there's some rules that shouldn't be broken. So that type of stuff. The last one of the series for March, anyway, before we go into a new topic, will be adapting to market regime shifts. Very, very apt at the moment, right? How to stay flexible without losing your edge, when to really rethink things, when to adjust, when to tweak, and kind of going through the process of that. And I think this is absolutely perfect for the current environment. So hopefully this series is going to help you. And if you like this, then please do check out Pepperstone, guys. They're supporting this webinar. This is hosted by them. So yeah, pepperstone.com. And if you want to check me out, I'm at tradersmastermind.com. You can subscribe to my free daily email, which people tend to like. If you're an active trader, you're interested in trading, you take this game seriously, or this business seriously, then yeah, definitely have a look at that. Okay. How do I get a recording to this meeting? It should be sent to you. I know a lot of people have asked this. It should be sent to you, and hopefully you will get that. If you don't, you can request it. I say reply to my daily email, I'll send it to you, or Pepperstone will send it to you. There's a strong echo in audio. Hopefully that hasn't put you off. Thank you for those strategies for better focus. I have some work to do. Thank you, Pat. I haven't been receiving a replay link for February and March webinars. I wish they were still posted on YouTube. Pat, email me. I'll sort them out to you, pal. Honestly, I don't know why it should go out, but what tech's like. Sometimes tech works, sometimes tech doesn't. Alison says, thank you, Mark. Amazing, on point. Appreciate it. Appreciate that, Alison. Xavier says, hi, Mark. I've been watching your content for a while now. I really like joining the community since Pepperstone is not providing service in my country. How do I decide on which broker I should pick? Xavier, if you want to find someone that's regulated, honestly regulated, and has been around for a long period of time. Pepperstone, obviously, if it don't serve in your country, then what can you do? But things with Pepperstone, they've been around a long period of time and they're regulated, and that's what to look for wherever you are. So that's the only advice I would give you for that. Okay, ladies and gents, thank you so much. Hope you enjoyed this session. See you again next Tuesday. Let's see what the market brings. Don't forget the clocks have changed in the US, but not the UK. So we're an hour out of sync. Take care, guys. Bye bye.